Welcome to the Titans of Industry show. Today I have a real treat for you. I'm here with one of the best analysts in the precious metals arena. I'm with Jeff Clark. He's the senior precious metals analyst for GoldSilver.com. You guys that know Mike Maloney wrote the incredible, the most basic book about gold and silver investing for the Rich Dad Poor Dad series, and it's one of it's probably the original book that I read going into the 2007-2008 era, and I'm very glad that Jeff Clark is with us. He's also part of the Strategic Wealth Preservation Group in Grand Cayman, and he's joining us today to go over charts and graphs regarding precious metals, and we're gonna boil down everything that's going on right now. And Jeff, how are you today?
Great. It's great to be with you, Laur.
Hey, I want to get started with looking at this chart that we're looking at on the screen, and it's a measure of the gold price in 1980 using the CPI measure that they used to use, and with today's price evaluated with CPI of 1980, and it looks like we're at all-time lows for the gold price, though nominally we're trading over $1,200. So what's going on? How can you explain this discrepancy, and what should people take from this?
Well, I'm glad you wanted to ask about this chart, because it really is making the rounds. Basically, the reason I did this is because you have to account for inflation. Everything goes up over time due to inflation, so the gold price should be going up over time due to inflation as well. The problem is, using the CPI, is the methodology used to calculate it has undergone at least 14 modifications that we know of since 1980. So how accurate can the inflation in prices that you're measuring be if you've changed the formula to measure it that many times over time? Well, it can't be. You don't use 1980 tax forms to prepare your tax return. So if we go back and use the formula from then, you can see on that chart, and I guess you have it up for people to see, but you can see that using that formula from 1980, which, by the way, is from John Williams at Shadow Stats, who does this sort of thing, you can see that the gold price, even though nominally it's around $1,200, is dramatically undervalued over time. Using that formula from 1980 to account for inflation, it's near its all-time lows.
What has changed with regards to the way to measure inflation from today to 1980, which is only 37 years ago? I don't see any reason to create so many changes.
Yes, exactly. Why have they created so many changes? And it's usually because they want to hide something. It's usually because they want to downplay the effect one thing has on the reading, or overplay an effect something has. Energy and food costs, as we all know, are not part of the CPI now. So the government has tinkered with that formula numerous times. Again, it's at least 14 that we know of, and it may even be more than that over time. And so when you change the formula, the premise is that how accurate can that measure be? So if you use that formula, you can see on the chart the inflation-adjusted price with the 1980 CPI formula would be over $11,000. So I'm not saying gold's going to go to $11,000, but I'm saying it was priced the equivalent of $11,000 plus using that formula when it spiked back in 1980. So given the types of crises and the types of things that we have built into the system right now, it's very possible that gold could spike that high again very easily. The point for now is that you can see that it's dramatically undervalued, the current price, when adjusting for inflation. So this is a buyer's market for gold and silver. That's the bottom line.
And I sat down with my wife just a couple of days ago to go over expenses, and food came out to be the third largest expense we have. Transportation or gas or energy is right up there, it's probably half of the food, or maybe a quarter for us, but it's ridiculous not to include them. Overall, I would ask you this: the 1980 price, gold, when it was 850, it covered the entire currency supply for a brief moment of time. Does that mean that $11,000 will cover the currency supply right now?
Great question. And that's really Mike Maloney's thesis, is that if you look back over history, it's basically repeated itself, where the gold price has covered the currency in circulation. It would take a higher gold price than 11,000 to do that today. Again, I'm not saying gold's going to go that high. Personally, I'm not sure I want it to go that high, because that would imply some really ugly economic circumstances. But the point is, gold's undervalued now, and it's going to have to go a lot higher if history repeats. History's probably going to repeat. Gold is going to go a lot higher. It's currently in buy mode.
Well, I'll tell you what, many people are very frustrated with the gold price. It's funny because on one hand, you want to buy insurance like physical gold and silver when insurance is very cheap, when the premiums are low and you get the full benefit of the policy, which is what is going on right now. But on the flip side, in order to enjoy gains from the mining shares, you want gold prices to go higher because that's their bottom line goes higher, etc. Michael Arnett, who's the head of strategic research for Bank of America, you're an analyst for GoldSilver. He's the chief analyst for Bank of America. His budget and his team, his algorithm, the kind of capital that they probably invest in research has got to be insane. And he came on a few of the most prestigious financial shows, and he's basically saying, look, zero interest rates do not create inflation. Zero interest rates fight deflation. And so gold is going down from 1900 to 1200 and 1100 when it was at the bottom, because we're in a deflationary environment, and that's why people are attracted to dividend stocks, because they pay some yields into to REITs, to MLPs, to utility companies. And now we're moving into an inflationary decade with higher rates, with stronger foreign currencies, and a weaker dollar. And he likes commodities now. He's saying, look, he even calls it the Great Rotation. Do you see this tightening period by the Fed as an attempt to curb inflation?
I agree with him that you can name it whatever you want, the Great Rotation. I like that name because I do think we have been in mostly a deflationary time, even though inflation has been higher than what the CPI says. But I do think we're going to rotate or shift into an inflationary time. I don't know if we're going to get a big deflation first or not. That would be my only exception to that. That is what Mike Maloney thinks. We're going to get a deflation first. He talks about that in the Hidden Secrets of Money video episode 6. But look, the central banks want inflation. They need inflation. It's the only realistic way to value the debt. They're trying to get inflation. They're not going to default on the debt. And at the same time, they can't stop spending. So did you know that most of the G20 still can't even balance a budget? Most countries in the G20 still can't balance a budget. They're still spending more than they bring in. You add on top of that the fact that central banks fear deflation. And yes, I do think the Great Rotation into higher inflation is going to come. I think it's practically inevitable. It's just a matter of when and what happens first that kicks in this high inflationary period. And, I wonder what asset does well under inflation,
Sure, and especially if real rates stay around zero negative, because if they raise nominal rates, the Fed fund rates, and inflation rises at the same time, well, then you got the 1970s scenario, and precious metals did very, very well. Historically, when the precious metals make their yearly lows, it's a good time to accumulate. What are the months that are optimal for accumulation? When should people that are on an accumulation program, I for years I hold between 4 and 10% of my net worth in physical precious metals, and I make my my purchases at strategic months because I've seen that it's very seasonal. Do you agree with that? And what would be those months?
I'm glad you brought that up because we're going into one of those seasonally strong times to buy right now. If you have that chart there, you'll see we went back from 1975 when it was legal to hold gold again in the U.S. That's why we started with that time period. And you'll see we went all the way through last year, and we averaged the daily price of gold up or down and put it into a chart for every day of the year. And you can see in that chart that the annual low for gold is usually like the second week of January. That's the low for the year, again, on average. After that, the best time to buy is in April or starting now for the next month. So June and early July, right before the 4th of July, are usually, again, on average, it doesn't always follow the average, but seasonally, over time, this next 30-day window has been the best time to buy. That's when you tend to see prices drop the most, when they're the weakest for the year, other than January, and that makes it a good time to buy because you can see the fall traditionally, as most of your audience I'm sure knows, is traditionally the strong time of the year for gold. So you do want to be buying, this summer for sure before August to get the best price.
So basically, what you're saying to me, if I'm listening to this, and I'm also a mining shares investor, is you need to accumulate your policy, your insurance, your precious metals physical during January, April, and right now, and prepare for mining shares to potentially go up during the second part of the year. That's an interesting observation.
Again, that's the average, though. Sorry to interrupt you, but that's just the average. Sometimes, some years it doesn't follow that, of course. It did not in 2008. But that is traditionally, yeah.
And take it for what it is. It's an average.
Right. And then we have the same thing with silver. I don't know if you have that chart as well, but silver really is strong in the very first couple months of the year. And you'll notice the weakest time of the year after that is right now up until the 4th of July. So especially for silver bugs out there, or if you don't have enough physical silver, boy, the next 30 days is, should be on average a good time to buy.
Now, our good friend at the Daily Gold, Jordan Royburn, he does a lot of analysis as to how big of a role does the weakness in the US dollar, the S&P 500, jewelry buying, a lot of the factors that people say are the most important for gold and in determining the price of gold. And I wonder, what is your opinion about jewelry buying and how much it plays a role for setting the price for precious metals, and how big of a role does the investment demand play in contrast?
I respectfully disagree with your person there that you're quoting. I don't think jewelry buying plays a big role in setting the price of gold or silver, for that matter.
That is exactly what he's saying, that it doesn't play a big role. He was analyzing it and saying usually people think that's important, but it isn't.
Oh, okay, then I agree. And the reason is because there are numerous studies that show the jewelry and even industrial demand play little to no role in the movement of the price of gold. All you have to do is look at India. They buy more gold jewelry than any other country in the world by far, and put up the gold price beside it, and it does not track whether their demand goes up or down, and the gold price does not necessarily go up and down with it. So gold is first and foremost money, and so the biggest factor for price is investment demand, and investment demand is the factor that plays the most impact on the price of gold. It's impacted by investors, particularly institutional demand. Central banks support the price, but it's really investors and institutional investors that seem to have the biggest factor on price. So
what would need to happen to everyday items that require silver, and what would happen to them if its price would double or triple? Meaning, I know that most items use very little silver, but there are thousands of items that need silver. So it can't be, I'm asking, is it a serious or a not serious consumer issue if the price rises substantially for silver? Let's say it doubles or goes towards the $40 per ounce.
Only a very small amount of silver gets used in most of those products. There are exceptions, of course, but most of them are, the amount of silver used in the product is very tiny. In some cases, it's actually like painted on. I've been to silver mine sites, a lot in Mexico, where they don't produce any dory bars, the big 400-ounce bars you see. They produce silver dust, if you will, because it's made for industry, and they sell it right to industry and manufacturers and that sort of thing. And it's very tiny. It's dust. You can pick it up, and it's like powder in your hand, and yet it's pure silver. So what happens to your cost as a manufacturer if 0.1% of your product doubles in price? Well, now it's 0.2%. So it doesn't really have that big of an impact. Where it could have a big impact is in a recession or depression. In that scenario, industrial demand of silver is going to decline. And by the way, we're overdue for a recession. We're currently in the third longest economic expansion now since 1785. I have a chart coming out for that. We haven't published it yet, so I couldn't send it to you. But the third longest economic expansion since 1785. So we're overdue for a recession. So I think one's going to happen here pretty soon. So a severe recession or depression would see industrial demand decline significantly. And frankly, that is one reason, the main reason I don't buy only silver. I always buy gold and silver. If we have a depression and the central bankers have a hard time pulling us out of it, printing money or whatever they're going to do, silver could suffer. Now, eventually, I think what's most likely going to happen, of course, is that they'll do whatever it takes, even if they destroy the currency. And that will be good for silver, and we will see the price explode higher.
Now, I want to switch over and talk to you about the cryptocurrencies versus the precious metals. How can gold and silver ownership become more modernized? Meaning, gold and silver are money. Gold so much more than silver in today's world. The free market has decided that, and we live in a free market society for the most part. We all know that there's so much manipulations and leveraging by the COMAX of it's not even alleged anymore. It's out in the open. But there is a growing group, a community of crypto investors who are choosing to own cryptocurrencies as an alternative to buying gold and silver. And obviously one of the reasons is it's much more practical to own a digital code than to own a piece of metal which you got to store physically. It's not in the physical world. It's not an atom. It's not a property. It's a code. And so the other thing that they point out is that gold and silver are inside of the system somewhat because they're susceptible to these price manipulations, whereas the cryptocurrencies are supposedly not, to which I would even answer myself that you don't know who's buying these cryptos, and it can have the effect that some government agencies can buy these cryptocurrencies without us knowing that. But I'll let you take the floor and kind of bring us up to speed as to some of the ideas on how to create a monetary system that does involve gold and silver in modernized fashion.
That's a very interesting way to frame the question, because in my view, as someone who's been in the gold industry, has made his living being in the gold industry for a while now, I've seen the gold industry become more modern, if you will. There didn't used to be a gold ETF before 2006, for example. So that's a paper product. I wouldn't buy it, but I'm saying it's modernized itself. And the big push now is toward vaults, and maybe we can talk a little bit later about that. You can even buy gold in bits now. There's Bit Gold. I personally don't own it. I wouldn't buy it, especially I wouldn't buy it just to avoid the price maybe being manipulated. I think the big issue for me, if I understand the angle of the question you're asking, the manipulation of the metals is going to be broken someday. It won't last forever. It can't last forever. And I don't think it'll be because gold might be more digitized someday at some point. I think someone could maybe figure out how to do that once it does become more digital. I think the manipulation will be broken, though, because physical demand is going to force the manipulators out. And this has been a big thing Mike has talked about, but Jim Rickards devoted a whole part of his book to it. This is his argument, that the demand for metal at some point is going to overwhelm the system. And I've done a lot of research and crunching of data on this, and the supply of new metal coming to the market is definitely going to fall for the next 5 to 10 years. And if we get a crisis, demand for metal is going to spike in that crisis. So those two things happening at the same time could really, see the demand for metal really overwhelm the manipulators. I mean, China and India are already eating most of annual mine production, so the writing's on the wall. New supply is going to fall, demand is probably going to go up, and it's probably going to spike like it did back in 2008, 2009 when the price fell and we had a crisis. That's going to put the manipulators on the run. So all that said, I think the crypto thing is a good thing. It does have advantages that the dollar bill in my wallet doesn't. I really like the development of the cryptocurrencies. I do think it's probably going to be a bubble at some point. There's so many of them now. So it'll probably bubble out, and you'll see, 4 or 5 or maybe a dozen of them survive and be the main ones that are used. But the critical difference between a cryptocurrency and gold is, of course, a gold eagle in my hand can't be hacked. If the internet's down, well, what are you going to do with your cryptocurrency? I've still got my gold eagle in my hand. So it really is the money of last resort, and I like that over what a cryptocurrency can do. I think cryptocurrencies are good. I think they're probably it's good to diversify into, but I definitely would not use it as a replacement for physical gold. No way. Sure.
Now, and by the way, just to elaborate, running with your theory about a crisis, if gold rises substantially, most of the world cannot afford an ounce of gold. That's just the truth. And therefore, a crisis is maybe bad for silver industrially, but thinking of the average person that wants to accumulate some precious metals, he's going to have to resort to buying silver. And just the fact that all the gold that's ever been mined is above ground, most of it, and the fact that silver's demand for industrial uses makes it vanish from the market is very interesting in the part of supply. So that might counteract any industrial weakness, the investment demand for silver in a real crisis, especially if it's a global one, and these Indians and Chinese who are most of them cannot afford even 1 ounce of gold, not to talk about other Middle Eastern countries and Central Americans and Middle America countries, Central America. So Jeff, I want to move on.
Oh, absolutely. I don't want to be misunderstood that I'm not bullish on silver. I am dramatically. It's probably going to rise more than gold does, and for the very reasons that you outline. It's just that it does have that industrial component, so you have to be careful there. It's just that's the reason I wouldn't buy only silver. But at the end of the day, silver's been money longer than gold has, even, or more often in history than gold has. So I'm really convinced that silver's going to outperform it. I absolutely agree with what you're saying.
Now, Jeff, I want to ask you about Trump's elections. Since the elections, it's created a crash with investment demand locally in the States. Every month, people buy less and less. It looks like gold sales and silver sales are down massively. Is that the middle class just out of touch?
I don't think it's the middle class out of touch, but I do think that Trump probably did spark this. A lot of gold bugs and silver bugs are more conservative. We did not like Obama and what he was doing, and now with Trump in there, maybe he'll do some more positive things. That's the thinking. So he probably did spark it. It's also true that retail demand in North America is soft across the board. Doesn't matter who the dealer is. Total demand for retail products, what you and I buy, coins and bars, that is soft. However, that's not the case globally. In Europe, there are mints that are having to go 24/7 in their production because they can't keep up. That's happening in Europe. The Perth Mint has been setting records. And all it's going to take is for one crisis, and the demand is going to go back up. I think some of the things that Trump are doing, if he gets everything he wants and everything's perfect and everything is carried out the way that he wants it to be carried out, at the very minimum, we're going to get high inflation. Because you can't do everything that he wants to do and spend the kind of money he wants to spend and not expect there to be inflation. So even if all of that works, and let's be honest, not everything's going to probably work. He's probably not going to get everything he wants. I think a lot of these things are baked in the cake. The fear right now, the issue for me right now is that all major asset classes are really stretched. Stock market's at all-time highs. Bonds been in a 36-year bond bubble now, bond bull market. Real estate prices, the average home price now is actually above the 2006 high, according to Case-Shiller. Debt's at all-time highs. The U.S. dollar's been in a 6-year bull market. Interest rates, they've probably bottomed now. They're probably going to be heading back up. Inflation is near all-time lows. Add all this up, and the need for a hedge is really never been higher. And the fear is, what if all these things start to reverse at the same time? And since they're all stretched, where are you going to hide? You can't hide or put your asset, your wealth in any of those things. So just from a practical standpoint, forget about being a gold bug. Gold and silver are probably the only undervalued asset class out there. So it really makes a lot of sense to be buying them now. And throw in the fact that gold is a direct hedge against a reversal in all these things. So if any of these trends do reverse, and it's inevitable that some, if not all of them, will, the gold price is likely to respond to that and really rise.
Now, let's talk specific. I've been accumulating metals for years, and I want to really stretch what we can do here for the audience and ask you, where are the best storage units, the best vaults that you know around the world, that you work with gold and silver that you offer, and just other deals that that offer just in your experience?
Sure. It's interesting because Bloomberg just came out with an article, and it was titled "The New Gold Rush is All About Vaults," I think is what it said. And it's really true. There's a lot of vaults being built around the world. And this was the point I alluded to earlier. The gold market is maturing. It is, keeping up with development. It is becoming more modernized. The point now is that there's really no reason for any investor to hold a paper gold product anymore, because you can buy and store just as easily right on your laptop, even on your phone, just as easily as you can buy a stock. If you have the table there that I sent you, you can see that GoldSilver stores in the US and Canada. They have vaults in Singapore and in Hong Kong. And by the way, we're going to have allocated storage coming out. Oh, pardon me. Probably within a month, and you'll be able to store as cheap as a Frappuccino. Buy one Frappuccino a month, and that could be your storage costs for allocated. So the prices really start low. So the point is,
people understand the difference between allocated and not allocated. Can you just go into that real quick?
Allocated is very simple. It just means it's in your name and title. It is off the books and of the depository. It's not on their books. It's in your name. So even if they went bankrupt, it's still your meadow. It has to be returned to you. So it's allocated to your name and title. So it really is a safe way.
And that's the way you do it right now in Salt Lake City, correct?
We have segregated right now, which means it's completely separated. Your ego is separated from everybody else's ego. That is expensive to do, and so they obviously pass that cost on to the consumer. We're going to offer allocated in all these locations and others as well, because then the costs go down dramatically. So,
if I'm not mistaken, is like 35, correct?
35 what? Dollars?
Yes.
Yes. Yes. Segregated is really for high net worth people right now. It is the ultimate in safety and security. Allocated is designed more for the average investor, let's say. If you're storing less than 100,000, you probably want to use allocated. It's just as safe as segregated. It uses the same vaults as segregated, but it's going to be a lot less expensive for you to do so. So that's coming really soon. We're working on that, launching that right now. So and you can do it all from your laptop. You can do it all online. It's as easy as opening a bank account. I mean, there really is no reason for someone not to use professional storage now. You don't want to keep it all in your home. That's probably not a wise thing to do. So this is coming. The industry is maturing. GoldSilver will be at one of the leaders of the pack as far as this goes. So it's really very exciting. So
how easy is it, Jeff, to transfer ownership, to pay someone with the GoldSilver that you have in your vault, or not all of it, but some of it? Let's say you want to pay for something, you want to pay somebody in gold or silver, or how easy it is to liquidate it?
Log on and click.
Okay, perfect.
It really is going to be that easy. You're just going to log on and click. It's just like anything else. If you want to transfer ownership, then yeah, you have to do that. There are steps you have to take. We can do that. My point is that if you want to buy, sell, trade, take delivery, all of that, just log on and within a few clicks, you're done. You've done it. It'll be very, very easy.
Perfect. Now, GoldSilver.com, I've been a client for years, and one of the things that you guys are so much more than just a bullion dealer. Can you just talk about what else do you offer, and just talk about the bullion and the bullion side of it, so people that are listening would know that exactly what GoldSilver offers?
Yeah, so I don't know if how many in your audience know, but I used to be at Casey Research, had a gold newsletter there. They decided to go a different direction, and so I had a lot of choices to where I could go to work, and I settled on GoldSilver, and it's probably for a lot of the reasons that you're still a customer and a lot of people listening probably are. One of those things is that education is really big with Mike. That's what he's really known for. It's why I got hired. He's known for his book, The Guide to Investing in Gold and Silver. It's still the #1 bestseller on that topic. And he's also pretty well known for his Hidden Secrets of Money video series. It's really excellent. These things are an hour long. They go into great detail. He's got 7 of them now. They they cost probably $250,000 to produce, and yet they're free. And it's just total education that he wants to bring to people. He really is on a mission to educate people and really save, in his words, the middle class by owning physical gold and silver. We have numerous how-to articles on this site. That's pretty much why I was hired. That's what I do. Probably his best video right now, though, and I think I sent you a image of that, but it's the Everything Bubble, and it's about a half hour long, and he really goes into detail about some of the things I was talking about how everything is really in a bubble right now, and the gold and silver are really the only undervalued asset class, and they will benefit when those bubbles pop. It's really worth watching. It outlines the details of everything and why and how to be overweight gold and silver right now. So it's really exciting. I really enjoy working for them. It's great. I'm doing what I love, and on top of all that, they have very competitive prices. So they really compete on price, and so I take advantage of that. I'm still accumulating myself, but I hope people check it out.
Jeff Clark, thank you very much for today. You're just a walking encyclopedia.
Well, thank you very much, and look forward to doing it again.